Carolina. And I'm just going to go with an overview of what I see happening. And then we will follow with Tony Lobier, who's going to talk about some of his concerns with regard to the AI bubble. And then Charles Zhang, who has worked with me on and off for decades and has excellent quantitative trading experience. And then we'll go to Mike White, who, like Peter Espig, is a professional in the commodities, precious metals space. And he's going to talk about what he sees in terms of cycles and names that he likes, including Blue Lagoon, which he helped to raise the initial funding for. But I will try not to bloviate and not waste any more time. But I think there's something to be said about the importance of cycles, and I think that we are in a new cycle. And in terms of the market, what I think may be happening is we could be topping here. We had that sell-off, which was called Liberation Day with the Trump tariffs. Everyone panicked. The market went down like 21%, and then it rallied 41%, which is pretty significant. And we're right now here, and do we go higher or lower? I think we're at a critical juncture. My argument and concern is that we're at, from a valuation standpoint, historic high valuations. Robert Shiller talks about a CAPE ratio, which is a 10-year average PE. We're at about 40.4. The highest ever was in the tech peak back in 2000 at 44. George Billman is joining us. He actually writes research on commodity stocks. Thank you, George, for joining us. But when I look at the market, one of the things that I learned having invested through the 90s and 80s, and it's good to take a look from a long distance. And what I see is, you had a big boom end in 2000, and it took nearly 10 years for that whole down cycle to shift. And but then you had this big up cycle. And to me, it just suggests if it's not today or tomorrow, it could be soon. One thing that I've learned from reading a lot is that margin debt is a good coincident indicator. And the levels of margin today are enormous, and they're at record highs. And when you have historic high valuations and high margin debt, that makes us prone to a collapse. Because once you start getting selling, then you get margin selling, which is forced selling. People are having to sell to maintain liquidity. But with regard to valuations, at a 22 times forward PE, which is about where we are now, historically, over the next 10 years, the S&P returns, between -2% and 3%. And most people who invest will say, well, historically, you get 10% a year investing in the S&P, and there's nothing, you shouldn't do anything. It's worked great for 30, 40 years. Well, that's true, except for those periods when it doesn't work, and we may be entering those. It didn't work during the 70s, and it didn't work from 2000 to 2009. And that's what my take on it. I think that we may be seeing a bubble in the mega cap tech stocks. This is AI driven. Very smart people are now getting out of NVIDIA. I saw that a board member of NVIDIA sold stock yesterday, 66 million.
Whoa.
Um, Welcome, Duncan Riefler. But I think a lot of it's dollar driven. And interestingly, what we're seeing is foreign stocks year to date are up 30%. Emerging markets up 32. On a 1 year basis, up 25 and 28% versus the S&P year to date up 17%, and the Dow and the NASDAQ 15, 20. But these are significantly underperforming, the major indices. Tony, is that you? Somebody's got if they could mute it, turn off their TV. We're hearing some
That's
background noise.
Kyla's TV, but I'll turn it off.
Thank you. Um, Leslie Barrett, thank you for joining us. Um,
Good to be here.
Leslie, what is your position at SPRI?
I'm just on the board of directors.
Okay, very humble young lady, great tennis player. You went to Smith, didn't you?
I did.
Okay, very smart too. Anyway, I was pointing to the outperformance of commodities. Um, and the emerging markets relative to the major markets. Now I'm going to talk about the strength in commodities, which in particular are a beneficiary of a weak dollar. And here what you have is that while Blue Lagoon is up 360% this year, when you look at the GDX, you're up actually, I got a better. Well, anyway, you're up about 150% and 168 on the GDXJ. Those are the indices of gold miners and the junior gold miners. Gold and silver themselves are up in that 65 to actually 129% for gold this year. So you're just getting tremendous performance in the monetary metal complex. I own nearly 5 million shares of it. I got into Blue Lagoon because I saw Crescat Capital had been buying it, and I think very highly of their research and their geologist, Quentin Hennig, and they bought it as high as 70 cents. So when it got down to around 10 cents, I bought it. But I also bought it because this guy, Peter Espig of Nicola, was buying it, and they're the processor. And they own around 7%. And I saw that they had bought the stock about a year ago and they've extended a line of credit. And rather than talk to managements, I prefer to see the smart money making their real commitments there who really understand what's happening at the mine. But I'll just be real quick on the model that I have for Blue Lagoon. Basically, we have a good idea of what the tons per day of ore that can come out, and it starts around 100 tons per day, and it should scale to 150, and then maybe end the year closer to 200. We have an idea of how many grams per ton, and initially, that number will be lower because of what I call kind of infrastructure. Ore is mixed in, but normally it's a higher grade concentration closer to 10 grams. But the bottom line is you can start to calculate what the production is, multiply it by the price of gold, and you start to see what the revenues are and, on a monthly basis. And we have an idea of what the all-in sustainable cost is and what the split is with Nicola Mining. So I've actually been able to come up with what are probably reasonably close numbers to where I think, based upon the conversations I've had with the people at Blue Lagoon, um, what the potential is. And if it is correct, they're going to be producing that they'll start milling shortly. That would be Nicola, and then it takes some time to process it, send it off to Taiwan. But they could get a check before year end. But I wouldn't bet my life on it. But if it's not by year end, it's certainly very probable the first week. But as you hit revenues, I think that's going to be an
So
important
Tyson,
deep.
sorry to interrupt. Just this is Peter from Nicola Mining, and the plan is to start commencing Blue Lagoon material this weekend.
All right.
All right. And so the point is when you start to go from a pre-revenue to a revenue generating company, it is a significant de-risking event. And I think that will give us a lift. And then the following month, you'll actually start to see those numbers start to rise and where the company should be. My estimates are that cash flows could be $2 to $3 million per month, and they will use that money. Half of it will be dedicated to drilling so they can assess the size of the resource that they have that guys like Quentin Hennig have said could be very significant, could be, district scale. And he was interviewed in an article and deep dive that I can provide for you. But, suggesting that there is a significant upside, but it hasn't been drilled, so you can't really estimate. But you can say, hey, this particular geological formation looks like Pergora with 32 million ounces, or Buritica in Colombia with 10 million. So Mike White will probably touch on it, but what he'd said in the conversations 2 weeks ago is, Tyson's probably right, somewhere in the range of $1.50 based on the operating revenues and cash flows. But if they start drilling into this rock and they start getting numbers that look really like there's a lot of gold, like this is not a 1 million ounce thing, it's 2 to 3, or actually 4 or 5, and that'll take probably 2 years fully to play out. But I mean, you could but what Mike said, and he can clarify that later, is you could suddenly see the stock start really moving ahead, going to $3 to $4. And I'm thinking, Jesus Christ, I can own this stock at 50 cents and it could be $3 to $4. And I feel fairly comfortable that there's a decent chance the stock could triple, which to me is one of the most compelling kind of return profiles. Certainly, there's risk. The biggest risk is a lack of liquidity, and it's a new mine, and so people should keep that in mind. But on the other hand, I think they have a really talented team. But I think that the story that really has emerged to me is the resource. And a major showed up at a conference in Beaver Creek and they had 33 one-on-ones. One of these companies. Absolutely massive. I think about $100 billion market cap. And Blue Lagoon's like, nice to meet you. In fact, all 6 of you. What are you doing here? He said, we operate in British Columbia. We like working with the regulators there. And you have an 18-kilometer strike that has not been explored. And it is the cash flows that are going to be driven that will allow them to determine just how big this is. And what you're looking at, and I'm not good at this, but I think there are a couple people on this call who could, and we won't get into it. But these little lumps and colors, these indicate the kind of geological formations that are promising. And the idea that you have these parallel lines are consistent with what could be a very significant opportunity. And that's the upside. So I like to think that I'm buying a fundamentally attractive company that is going to grow into a good cash flow generator. But on top of that, you have this upside where they're going to redeploy their cash flows, half of them, and that will be really drilling into this chance structure or some of these other areas. Most of it right now, they think they have about 1 million ounces in just this Boulder vein system. But, could it be 10 million ounces? We will see. But if you were to be a betting man, you would say that this is a property worth exploring. And, when you have $100 billion company show up with 6 people for a one-on-one and say, we want to see you as you start to drill this, it gives me a lot of comfort that betting on Nicola Mining and Crescat was the right thing. Here's just another picture, and to me, all this is Greek. George Billman or Peter Espig or Mike White could probably comment on it, but that might be too much detail for today. But I look at things in a cycle sense. I mean, I made a lot of money in the 90s in tech and then got out at the top. But I didn't realize that when a 30% correction in the market is not a full correction. When you go into a negative cycle, these things can be a decade or so long. And this particular ratio, the S&P versus commodities, show periods of time that are several years. And what my hope would be is for the next several years, we see commodities and precious metals do particularly well. And hopefully Blue Lagoon emerges as one of the leaders during that environment. But here's another way that I look at it, and that's a chart showing deflationary and inflationary environments. Inflationary environments such as the 1970s, gold did well, went up tenfold, oil went up well, but then it did nothing during a deflationary environment where stocks did incredibly well. Again, from 2000 to 2009, stocks were terrible, but commodities were great. And my bet is we're probably peaking on the S&P and the NASDAQ, and we could be in for 10 years with a tailwind, and that would be very positive. One of the other things that is interesting to look at is when you look at the market over long periods of time and allocations to sectors. I got this from Crescat. Information technology as a part of the S&P 500 is 36%, up from, I guess, 10% in about 2000. So you had a triple, quadruple. But at the same time, energy and materials went from about 20% down to 4%. And if we do have a change, I think that you have a very favorable uh, period that could help. The other thing is the spam never stops. Um, Jeff Gundlach is a top strategist I like, and I got this. This is from Goldman Sachs, but basically where everybody is allocated amongst investment professionals, very heavily into equities. And there's been very little in gold, though you're now seeing people adjust their models so that they're allocating to 5 or 10%. And I think Jeff Gundlach said, accounts should have 25% in gold. But the point is, you could be in a period where you have a lot more allocation. I mean, everyone was just like 60-40, 60% the S&P and 40% into bonds. And that's the way to go. But I think right now, when you look at the valuations, that is not the right way to go. And I think that tilting towards a more inflationary uh, bent is going to be something that could lead to significant returns going forward. So one of the drivers is the dollar, but what's driving the dollar and gold in particular is that foreign central banks are now buying gold. They're not buying U.S. treasuries. And in fact, they're buying more gold than they are U.S. treasuries. And we haven't seen that kind of activity since the 1980s. And so I think that we could have several years where you continue to get strong purchases of gold by foreign central banks, which will allow other countries to continue to trade not in U.S. dollars, but in their own currencies, which are backed up by their own central bank's ownership of gold. I did a back of the envelope assessment of where gold could go and looked at the moves in the 70s and then the 2000 to 2011 period and saw the average rise was in that 500% range and applied that, took a 515% move off of the low in 2016, and I came up with a price of $6,500. That doesn't address who the buyers and who the sellers are, but it gives you an idea of what the potential dynamic is, and that's favorable. And I'm more favor. I prefer to own gold miners as opposed to gold, and the ratio of gold miners versus gold has been in a downtrend and now appears to be reversing positively, and that's one of the reasons I continue to like gold miners. Here's a piece from UBS, and I've shown this before. It's a little dated. This goes back to August, but you're looking at the earnings of gold miners being up like 100% or more, and they're trading at about 11 times earnings, and they're trading at a much lower multiple than they were a few years ago. So the upside, despite the moves, really still on a fundamental basis are attractive. And I picked this up also, which showed if you looked at all the ETFs and you did a assessment of gold ETFs versus all the others, at the peak in 2011, you're talking 7, 8%, and currently you're looking at maybe 1.5%. So the argument that we could be in a multi-year period where the wind is at the back of people who are invested in gold is why I've made the significant investment here. And it happened that I found Blue Lagoon uniquely cheap. But to put it in a longer term perspective, because again, I think that that's important. When you had that peak back in 2011, silver really spiked, went well above uh, the move in gold. And I think by the time this all ends, silver will be a lot higher. Silver could be $200. I think that gold mining stocks could double, maybe even more. I think and we'll see that, and then everybody will be crazy about this stuff, and that's probably the time you should be, really trimming back on your positions. But if I'm right, I feel like, uh, this is a great time to be getting into the space, and the potential long term is meaningful. I think there's another phenomenon that's going on, and that is the considerable interest that's occurring in AI and in the Mag 7. And I love John Kenneth Galbraith. He's a great market historian. And, he said, bubbles are all the same. A new idea casts a spell, credit expands, prices rise. Everyone feels smarter than crack. Reality bites and it all comes crashing down. And Robert Schiller really described the same thing maybe 50 years later in Irrational Exuberance. And, it just has that feel to me here. One of the areas that we're seeing is suddenly there's a lot of debt finance to drive these purchases. And, once that cap X cycle, cracks and starts going south and the demand isn't there, then you could have a period of significant pressure. And what my expectation would be, being in gold is a great hedge. It could be other commodities. It could certainly be silver, and whether it's the metal or the stocks, the miners, doesn't really matter. But there is an argument, and Tony Lobeer can elaborate on this. But you have sort of a circular finance in the way a lot of these deals have been put together. And anybody who's been around, like Tony or myself, Wall Street has a great ability to run things way too far and just get overly committed. And I'm noticing actually there is seems to be deteriorating strength in crypto and Bitcoin, and that tends to be highly leveraged and relative to the NASDAQ. And if that starts breaking, I could envision a spillover and downward impact that would be very problematic for the market. So I'm Tyson Halsey, and I'm going to stop this share and have Tony Lobeer. Tony, are you there?
Yeah, let me,
Go ahead.
okay. So, basically, I have a macro view which is very similar to Tyson's, but I come up about it differently. I think the government is head over heels in debt. I think the politicians are totally incapable of curbing spending, and this whole attempt by our president to take over the Federal Reserve in one form or another, I think it's leading to a very nasty degradation of paper money. And if paper money gets degraded, you want assets. And but I mean,
That's the debasement trade, I think is what they're calling it.
well, okay,
Oh,
fine.
well, no, I'm agreeing with you. I'm just,
No, okay. So anyway, I agree with that. But the thing that I've been really focusing on now is this the AI situation. And I think whether or not it's a bubble is really the wrong question to ask, because the problem really is centered on OpenAI. And OpenAI is going to have revenues of about 13 billion this year. They're going to lose probably 50 billion, and that's a lot of money. And in addition to that, they have orders out there for $1.3 trillion of semiconductors and other equipment to build data centers. Now, I mean, I think the Wall Street community really doesn't want us to recognize this because they're making too much money on this whole open AI situation. But the problem is that it's financially unsustainable. And I don't know how it works out. I think the latest quotes were that Amazon was going to invest 10 billion, but with the proviso that that OpenAI buy Amazon chips, which is another one of these circular situations. But then this morning there was a report that OpenAI was going to try to raise many billions at a valuation of 750 billion for the company, which would be up from 500 billion. Now, all I can say is, you know, if they can really do that, they're great salesmen, which I think we already know. But their situation is untenable, and because of all the circular purchasing throughout that ecosphere, I mean the whole situation is very dicey. So that's my read.
Thank you. Why don't we move to Charles Zhang, who I've worked at a couple quant shops. He has some commentary. Charles, are you here? Let's see.
Okay, let me unmute myself.
There you are.
All right. The market in the last few months has been like the richest trading environment since like 2021. So
Richest, most expensive? What do you mean rich?
it's not the most, I would say like opportunity wise, like rich wise. There are just so many trading opportunities. So we often talk about like bull market or bear market, but the last quarter is not defined by any like single direction. It was actually defined by speed, just how fast the momentum is. It was like a trader's market with distinct phases of euphoria and capitulation. So today, I want to like walk you through how I navigate this, not by guessing, but by systematically reacting to changes in momentum and market breadth. So until 2 months ago, I was mostly focused on the longs. I identify a specific pocket of high momentum story stocks, the type of company with a compelling narrative, very heavy retail interest and
You
aggressive
know
price
what
action.
yellow is?
So following my system, which I've talked about many times before, I specifically look for stock with pre-existing momentum. Then I waited for consolidation and I bought the breakout on significant news. So I wrote the trend by trading with moving average, and the results were spectacular. I had a few names that had P&L that exceeded like 100%.
You want
But
to tell
I
us what
didn't
those
buy.
were?
It's like the quantum stocks and like the nuclear stocks.
Okay, go ahead.
Yeah, like company with like no revenue, like only a story.
I know. It sounds like Blue Lagoon. Keep going.
Yep. So I didn't buy those stocks because I believed these stocks were fundamentally undervalued. I bought them because they had momentum. And more importantly, I respect the trend. I let the winner run. So this brings me to like the most important psychological aspect of this period. I didn't drink their Kool-Aid, so I have lived through many market cycles so far. So it's really easy when a stock outperforms this much to start believing in the hype. You start to like read the message boards. You start to believe the story is going to change the world. But I maintain a strict separation between price action and the company. I recognize these stocks for exactly what they were, product of a strong bull market. They were vehicles for speculation. I knew once the momentum broke, the fundamental story would not save the stock price. I mean, there shouldn't be any emotional attachment. They were rentals, like not long-term holdings. So this detachment paid off when the tide started to turn more than a month ago. So I didn't just sell. I turned net short. I watched for the momentum break, not just in one stock, but across the whole story stock group simultaneously. So when the leaders start to falter, I knew the follower would also collapse. So I initiated a short position as the trend broke. So as the saying goes, stock takes the staircase up, but they take the elevator down. So the speed of decline was breathtaking. So while it took months to build the upside, many of these names dropped 30 to 50% in a matter of just 1 or 2 weeks. So by recognizing that the party was over, at least for this group, not holding on to hope, I was able to capitalize on the downside just as effectively as I did on the upside. So reflecting back, the biggest improvement for this period has been I'm able to detect potential market trends by tracking market breadth. So I wasn't just looking at the indices in isolation. The S&P 500 barely down from an all-time high, but I was tracking a large basket of speculative individual stocks. When a large number of them stopped participating in the rally, even while the index looked fine, I mean, that was a sign. Like watching for non-participation among the broader basket, it gave me the conviction to exit the long and aggressively enter the shorts. So now this brings us to where we are today. Right now, there's not a whole lot of clarity. I'm currently seeing too many mixed signals in the market. So the aggressive trend, both up and down, have stalled. So the noise level has increased. I'm not really sure like which way is more likely in the short term. So because I treat what I see, so right now I don't have any clear edge. So I move back like to mostly cash again. I'm happy to sit on my hands and protect the profit that I made in the last quarter until a clear trend reemerges.
Thanks, Charles. Was that it? Or you
Yeah,
got
I mean,
more?
I want to like wish everyone a Merry Christmas and Happy Holiday. So enjoy the break, recharge, and let's get ready to whatever the market brings us like next year.
So what do you think is going to happen next year?
I have no idea. I'm just gonna follow trends and react.
Very good. Let's go to Mike White. Mike, are you there?
Yeah, I'm here, Tyson.
Look at that. He's wearing a tie and everything. I guess you must have heard about this famed audience. So,
Just
Mike, tell
follow,
us a little about
just
your
following your lead.
experience, how you know me and Blue Lagoon, and your thoughts,
Yeah, we met
the cycles, individual names, whatever.
for sure. Yeah, Tyson and I met back in the summer on a site visit to Blue Lagoon. As Tyson mentioned, we had helped fund Blue Lagoon in the earlier days, during the COVID period. Rana is an excellent operator, the CEO of the company. He's done a tremendous job dealing with a very difficult regulatory regime in the province of British Columbia when it comes to putting a gold deposit into production. He's been successful in doing so, and I'm sure we'll hear more from Peter, and you heard from Tyson in terms of that production. We like that. We like that you always go through teething pains, as Tyson touched on. It does take a few quarters for the market to understand that you've hit your stride when it comes to early stage production, and so we should see some good things for Blue Lagoon vis-a-vis the production of gold in 2026. And so where do you go from there, right? Tyson can show you numbers that have the stock at maybe $1.50 or so based on production, and that's fine. At IBK Capital, though, and myself personally, in terms of the investments that we make, we like to see a lot of upside. We're more of a venture capitalist model. We want to see a 10x on anything that we put our money into, at least the ability to do so. And so when I look at Blue Lagoon, I think that they've got a very solid base with the production. It's very unique. Not a lot of explorers it's very rare that they have production or a production scenario. And so we look to the exploration upside, and that's where you have a tremendous amount of potential torque to the investment in Blue Lagoon. And that torque is compounded positively by the fact that they will have revenue, cash flow, earnings from their production, especially in this gold environment, which we can get into afterwards, but a very positive gold environment. So we think that that torque is going to be positively impacted by the fact that they will not have to dilute themselves as aggressively as most exploration companies do when it comes to proving up a gold resource during the exploration phase of the discovery phase of a gold deposit. So you've got factors here at play that really help improve the potential upside of the stock for Blue Lagoon. And as long as Rana is on that path where he's got his production, but he's also got exploration, because it is a very promising property and project. He has multiple veins that he can drill out. It would appear that those veins have the ability to host gold with very high grades in today's market, 10 grams plus. And that's when you get into modeling it along the lines of some of these other great discoveries of the past of these types of vein systems that Tyson mentioned. And so, what's the upside there? Well, if they have 1 million ounces today and they're in production, and we are where we are, production will get us, through $1 and or so. But then the upside lies in the discovery of more gold from these veins. And Rana takes things slowly but measured. He's very careful with how he spends his money. Drilling is very expensive. There's a lot of groundwork that needs to be done before you drill anything. And I feel very confident that he will take that time. So he will maximize the probability of success from every hole he puts in the ground. In the meantime, he's limiting dilution to the shareholders with his gold production, and therefore it's a win-win. Let's let him discover the gold. What's the upside potential? Well, if he discovers a few more million ounces, let's say that it's looking like it could go to 5 million ounces. The rule of thumb in going back over the years is $80 to $150 per ounce in the ground if you're an advanced project, but $200 to $300 per ounce if you're a producer. I think he'll be somewhere in between because he's a smaller producer, and it'll be considered certainly an advanced project. So even at $200 an ounce in the ground, let's just say that he can discover 5 million ounces. That's $1 billion. I think at that point, 2 years down the road, gold will be at higher prices. These rules of thumbs will have shifted. They need to shift. They need to shift higher to reflect the higher gold prices. But using, the past to try and value the future, I think that's your floor. And with a floor of $1 billion, let's assume he has to dilute himself a little bit. There's 140 million shares outstanding now. He goes to 175 million. You're looking at a $5, $50 to $6 stock. And that's your torque. That's your torque on the upside. In my mind, it's on the exploration front with a solid foundation in terms of the production. So we like Blue Lagoon. We hope and we wish Rana, very well in his exploits. As long as he continues down the exploration path in parallel with the production path, then I can see, the ability for this stock to perform quite well over the next few years. Just talking about the discovery curve, it is an area of the life of a project that can be the most aggressive on the upside in terms of the production of value over a very short period of time. It's during the discovery phase of a project. And that's where we like to be. It's called the Lassonde curve. You can look it up. But we look for projects that are on the cusp of that discovery curve. And we strongly believe that Rana can be on that discovery curve, even though he's in production, because of the potential upside of the project. We're looking at other projects as well. We have invested in a lithium project in Nevada. That's called Peloton Minerals. They spent 18 months ground truthing a project that they have right next door to the highest grade lithium and clay deposit on the planet. That's owned by Surge Battery Metals. Peloton drilled its project just a couple of weeks ago, put 4 maiden holes in, hit exactly what they wanted to hit, very deep depths of clay from surface all the way down to 500 feet. They ended the holes at 500 feet, and many of the holes ended in clay, so they haven't found the bottom necessarily. That's all very good and well. We need to find out what the lithium assays are. All indications are that the lithium quantities in the clay should be economic. We are right next door to the highest grade lithium and clay deposit. Their average is 3,000 parts per million. Thacker Pass, which is further to the west in Nevada, northern Nevada, owned by Lithium Americas, is going into production. It's backed by GM, Department of Energy, and the U.S. government bought 5% of the project, and the public company. It's a Canadian company. That has a value of about $2 billion right now. Surge Battery Metals has a value of about $150 million with its deposit. It's early stage for its deposit. It hasn't started developing.
Stop you for a second, because this sounds like a great story, but I'm not getting some things that some others might be unclear on. You mentioned Surge and Peloton. So what is the company to capitalize on that? Is it Peloton?
So Peloton, and I was just going to say Peloton, which is the neighbor of Surge, has a market value of $15 million. These are all Canadian dollars.
And Surge is your comparable, your neighbor. Is that correct?
Yeah, Surge is the neighbor. I wouldn't necessarily say that it's a direct comp. If we meaning Peloton, I say the royal we because we're shareholders. But if Peloton, if it has decent lithium grades, the size of its deposit is 35 square kilometers. It's larger than Peloton's. It's the same size larger than Surge's, and it's the same size as Lithium Americas. It'll be bigger than Surge's deposit. And I'm not knocking Surge. We want Surge to do very, very well. We're cheerleaders for Surge. There's a great relationship between Peloton and Surge, but Surge has property ownership. Has a property ownership structure that's a bit complicated, and that any type of complication like that just lends to complication when it comes to picking a partner. These assets need a partner. You need a downstream partner like an auto manufacturer or a battery company or an integrated mining company to come in. These are very, very large cap projects, and they need partners. You need the Department of Energy say. So we have a very clean structure in Peloton. It's 100% owned with no royalty. It's BLM land. So our Our direct comparable, we think, would be a company like Ioneer, which is also in Nevada. It's to the south in Clayton Valley. It has Ford as its partner. It trades around $500 million market cap. And we see that as where Peloton could go. So sure, first stop, maybe we hit a market cap that's similar to Surge, but we have very, very clean ownership structure and no royalties. So there aren't any wrinkles there. So we can immediately move to picking a partner and starting those negotiations. It's very wide audience, the partner. It could be an integrated mining company. It could be an energy company. They're buying into the lithium space. It could be a battery manufacturer. It could be an OEM, like an automobile manufacturer. There's lots of players that could potentially step up. And then there's the US government as well. And I'll emphasize that the push here and why the US government invested directly into the project and the company, it's all about securitizing the supply chain. The vast majority of lithium that's upgraded is upgraded by the Chinese. So projects around the world, including Australia, South America, they send their lithium concentrate to China. China upgrades it, and that goes to the OEMs. And the OEMs, at least from a Western perspective, they would rather not be dealing with the Chinese. These projects in northern Nevada, the lithium is produced and upgraded on site. So it is sold directly to the end user. GM will be buying directly from Lithium Americas and using that product directly in their products. And so that's what North America wants, and that's what these deposits can provide. And it also captures that margin, which is why these projects can be very economic and put out a lot of cash flow and earnings because you do capture that margin. In addition to that, you're in the state of Nevada, which is the #1 state to do business in when it comes to mining. They are doubling down on lithium. The state of Nevada views lithium as the single most important contributor to their economy when it comes to resources, period, going forward. It's always been gold. Before that, it was silver. And now it's lithium. Today, the state employs more people in the lithium ecosystem than it does in gold. And that's a huge shift for the state. But they're very serious about it. So we believe that Nevada will become the breadbasket for lithium production in North America. And these projects are large. Just to put it in perspective, Lithium Americas Thacker's Pass deposit will produce, once it ramps up, 160,000 tons of lithium carbonate equivalent per year with an 85-year mine life. And that type of production puts it up as the #1 producer next to a company that's operating down in Argentina, which also produces about 160,000 tons.
So should we own Lithium America too?
Yeah, you can. In terms of my investment strategy is to be on that discovery curve. Lithium Americas is beyond that. They're in development and they're going into production. That stock can perform well as companies do when they transition into production. That's another curve. I prefer to be on the discovery curve. So yes, you can own Lithium Americas if you believe in the global electrification of the world, which includes data centers. It includes baseload power from alternative energy and green energy, in addition to electric vehicles, and just the general electrification of the planet and all the tech that goes with that, all the batteries that we have in our phones and everything else. If you believe in that thesis, and you believe that the world is expanding, which I certainly believe it is, if you believe the world is going to be positively impacted by AI, which I certainly believe it is, taking Tony's remarks in hand, these things the stocks can get a little bit ahead of themselves, but the lithium is required, and the forecasts are that we will be in a lithium deficit if we don't ramp up the production. So yeah, you can buy Lithium Americas, you can buy Surge battery metals, but if you want torque, and you're willing to take this is a smaller piece of your portfolio, right? These are smaller companies, these are junior exploration companies.
No, it's 100%.
But if you want the potential upside of a home run, then Peloton is a great investment at this moment. The assay should be back at the end of January, and we'll know. And it's a broad range. They could have 1,000 ppm They could have 9,000 ppm. But anywhere, in there, it's a home run for this project in
I
terms of
believe
its
that you told me that the chief
world-class
was
sponsor.
that the firm that the geologist exercised options that were out of the money or no?
That's another project that's
Okay,
on the
just
discovery, but that's
n-
something else. That's a bit.
sorry, I don't mean to
Anyway,
interrupt.
that's my lithium presentation for today. I'm a strong believer of the lithium supply chain expanding in the United States, and we couldn't have a better environment for that right now. So
I try to keep these things relatively short. Thank you very much for your share. I'd like to get Walter Harrison, who was a retired hedge fund manager with a excellent record, to speak, and then maybe Peter Espig, if he'd like to chime in, and then open up to questions. Walter,
You
you
mentioned
there?
others. Well, I'm right here. To be clear, uh, I'm not retired. I just no longer go short.
That's good for your heart.
Yes. And I really want to talk to Mike and obviously the rest of you guys. Mike, do you know Fred Hickey? Have you heard of him?
yeah, I've heard of him. I don't know him. I don't know him.
Okay, he has a monthly deal, the high tech strategist.
Hmm.
Uh, it he would be an ideal man to talk to. What happened is he thought that in general, the high tech stuff, has been overpriced for a while. And starting 4 or 5 years ago, he got heavily into gold and silver, et cetera. He knows exactly what's going. He knows the situation in Canada. You should uh, get to know, call him. You can email him, the high tech strategist at yahoo.com, and you should explain to him about Blue Lagoon. It's just marginally earlier than some of the other stuff he has, but he's very good, and you're obviously top notch. You know what you're doing, and I'm very impressed. And so, uh,
Yeah, I'll
if
do
you
that.
can,
Thank you. Yeah,
if
Walter,
you
I'll
can get
reach out
him,
to him.
yeah, and if you can get him to recommend it, which I presume he will, find it on his work. I mean, this thing is getting everywhere. I mean, you make sure you have your full position, but at any rate, thank you. Uh, and
Yeah,
now
I
on to
actually
what
have
else.
a wealthy tech exec out in California, and he said, yeah, he was writing all about tech stocks, and he ended up not doing so well there, but he's been great on the gold and silver trade, which is ironic, but nevertheless, Peter Espig. You're a Goldman guy. I've never known anyone dumb to work at Goldman, and I'm very impressed with your company and what you're doing with Blue Lagoon. Do you have any comments in general?
Yeah, so first of all, I'm an ex-Goldman guy. Because I'm if I was smarter, I wouldn't have got into mining, but here I am and trying to make a living the way I can. But just a few comments that I have, and thanks everyone. It was very insightful. I really enjoyed the different discussions. But you know, I'm my background. So when I was at Goldman, my background's debt. So I'm a conservative guy. I think conservatively. I know Mike talked about home runs. I'm a former football player, so you can throw a deep touchdown pass, but you can also run the ball in. And I'm a run the ball in the end zone type of guy. And so I just think very conservatively. All steps are like Rana, well thought out. I don't take risk. I'm very risk averse. Here's where I think Blue Lagoon and Nicola will benefit over the coming year as well. And you've touched about a lot of things, but I'll bring up something different. So Nicola in February, we expect in February, Nicola Mining will be trading on the NASDAQ. And we will be the first company in history, Canadian history, to do that via ATS, or a ADR. So we will be trading where we'll be pooling shares. So we'll be trading in Canada. We will pool shares. That ATS will be listed on NASDAQ. And there was a lot of Canadian companies wanted to list on NASDAQ, but it has been difficult. And the TSX side, as well as the NASDAQ side, have been very careful as to who they will allow to do that. And the reason why Nicola was the group that was chosen, and as Tyson mentioned, I was one of the pioneers of SPACs. I did 1.2 billion in SPACs on NASDAQ. So my company's listed on NASDAQ. I've sat on 9 NASDAQ boards, and I've never been sued or litigated. And so as part of this process, and we all know that the US is very litigative. And so Canadian companies often over-exaggerate, and that's just the reality of the junior mining market. So we went through this process where the NASDAQ said, okay, we will now list Nicola Mining via ATS. It'll be a pioneering type of transaction. And I'll tell you where this relates now to Blue Lagoon is one of the differences in dealing with Canadian investor mentality versus US investor mentality. And Mike would know this very well, is that Canadian investors understand grade. They understand intercepts. They understand, grade of exploration. What they don't understand is operations, because there's if you look at the listed mining associated or exploration companies on TSX, on the TSX Venture, 1.8% of listed companies have any form of cash flow. So that means 98.2% have no cash flow, but they're trading. So, and it's that cycle of the Lassonde curve where you go out, you raise money, you drill, hopefully you raise at a higher price next time, and you go through this cycle. So what we're seeing is where Blue Lagoon will benefit, I think, in the up and coming year, is as they become a producer. So now they're in the producing realm. And so US investors or investors that like cash flow now will suddenly look at this new player, to like similar to Nicola, but you've now got a new company that actually gives you exposure to gold, rather than having ounces in the ground. You actually have something that is trading ounces in the market. And of course, you're still going to be able to get the ounces in the ground through exploration. So you kind of get the better of both worlds, where you're going to be producing and you're going to be exploring. And that will allow institutional investors in the United States who prefer to have cash flow entities, and you'll still have the people in Canada who like the exploration upside. So very different mentality. The other thing I would say is what people, most investors don't realize, is that gold is not gold, silver is not silver, and copper is not copper, and grades are not always what you expect them to be. And I'll give you an example. So, like, for example, mining in British Columbia, a gold mine in British Columbia mines cheaper than typically a gold mine in Nevada, but Nevada is still cheap. But like if you go to South America, and the reason is I'll give you an example of Nicola. So Nicola, our cost of power is 2.8 cents Canadian per kilowatt, because we're on the grid. And so we use electrical power. Our water's free. We have our water cost. So Nicola has a 850,000 gallon per day water permit. We don't pay anything for our water, and our cost of power is cheap. So that's why if you look at, for example, copper assets, if you look at a copper mine in British Columbia, that's why some of the lowest grade copper mines in the world are all based in BC, because the break-even cost of mining a copper asset in British Columbia is 0.2%. Mexico is 0.35. But when you get to the Andes, you can have 0.7% copper and you're break even. And so, we need to also look at the cost of mining. And Blue Lagoon is in a region where the cost of mining, the cost of power, and is cheap. So the one thing about British Columbia is the barriers of entry. If I look at Nevada versus BC as a jurisdiction, Nevada, the barrier of entry and getting your permits are much easier. It's a great jurisdiction. Quebec is like that. We're quick to get your permits. BC is not easy to get your permits, but once you have them, they don't get pulled. So, kudos to Rana for, and myself as well for spending years and years working behind the scenes to get these permits because they're not easy to get. But once you get them, your cost of production is very cheap. So those are my comments there.
That's fabulous. Anyone have any questions or comments for this august group of analysts and operators? Tony, you're on
I'd
mute.
just like to comment. Let's see. No, I'd just like
No,
to
you're
comment.
fine.
I think since I've joined, this has been one of the best conversations I've ever heard.
Thank you. I pick smart people to make up for my efforts.
But then
But
you
yeah, well,
then
I
you
was
interrupt
fortunate.
them.
I would second that. I thank you, Tyson, for inviting me. This was a very productive session.
It all comes from the fact that I got invited to the Blue Lagoon mine opening conference, and there I actually got to see the real operators in the space, and I I was able to get there, develop dialogues with them. And, I can recognize smart people who know what they're talking about. And I think that, if I'm right about the cycle and you can get in on some of the earlier companies, the opportunity is immense. And I'm delighted to have these guys speak. Any other comments?
Tyson, I have a question. One of the points that you brought up in your presentation, and that had to do with margin debt. The recent phenomena of I guess the whatever you call them, the younger generation, Z or millennials or whatever, and trading in Robinhood and you know that type of. Is there any parsing of the data on the margin debt that gives you a window into the explosion in equity trading by a much younger generation?
I think that it facilitates it. I think we've really just gotten into a as typical in any kind of bubble, people's willingness to just speculate and has gone through the roof. And I think that technology has made it so easy for people to trade. Um, I just think it's emblematic of a real kind of bubble mentality. I'm not sure whether I exactly answered your question. I'm trying to correspond with my son who's picking me up from an ex appointment.
I'd like to offer uh, 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 maybe not a better reason, but I mean, part of the reason why it became this bubble is that with COVID, all these young guys were trapped, and Robinhood came along, and the government was shipping out money legally and illegally, and so they all got into trading.
Yep.
I'm not a trader. Obviously, Charles is, and he's a wonderful one, but that's not really investing.
Right.
And but these guys all got into trading, pure and
Fair
simple.
point.
And then obviously, once the bubble really starts forming, or then everybody wants to go in. And now, just as Charles was saying, as soon as people get the slightest, all these guys, they go in, they run it, and then they get out of there fast. And anybody that's not just doing that 48 hours a day, goes through all their money pretty quickly.
I'll just jump in real quick. This is George Billman. Yeah, thank you, Tyson. This has been an interesting presentation. I just make my summary comment on Blue Lagoon. I mean, it's got like triple leverage. It's going to have the ability to grow reserves and grow production in a rising gold environment. So I think that's a pretty special situation, and it could be that I think your model may be correct, Tyson, in terms of where it can go. Um, my other 2 cents are that I think people should take a look at Nicola. I mean, I've met Peter and got a very interesting like multi-layer strategy going on in British Columbia. It's sort of a unique permit situation himself. I think he can serve any processing from multiple sources. So I think nickel is also a pick for people to take a look at.
And I'm going to interrupt here because it's my show. Uh, but I completely agree. And Bill and George Billman's been helpful in talking about Nicola. But having met Peter Espig, I think that if there was a stock other than Blue Lagoon, Nicola would be it that I would be adding. And I kind of think of it as, in the oil and gas business, there's upstream explorers but then you have the integrated. And what Peter Espig does at Nicola is he is processing ore from multiple mines. He has ownership of mines, but he's getting revenue from other people, which really helps to de-risk his business model as well. And they're a small company in the right space at the right time. Uh, George, if you want to continue.
No, that's fine. I like to be short and sweet usually. I just trying to give you my bottom lines on both of those.
George has a very reasonably priced Substack subscription. I think it's like $5 a month, and he writes on a lot of these companies.
Yeah, the title is Resourceful Insights, and actually, anybody that contacts me, I'll give you a intro free subscription.
Do we have any final comments? We've gotten over an hour. I try to keep it at an hour, and I want to say, as everyone else did, that thank you so much to the speakers. They were brilliant today.
Okay, I do have something to say. George, how do I contact you?
My email is simple. It's my initials G and B, and then MAN, and the numeral 2, gbman2 at Gmail, and I can take care of you from there. gbman2 at gmail.com. I do have write-ups, by the way,
Very
on
good. Thank
Nicola
you.
and Blue Lagoon. So I think more than once.
Sorry to interject again, but just one thing that actually does excite me about the markets right now is what I'm seeing is this expansion of investors that are interested in mining. And so I remember my son. So my son is an investment banker in New York, but he used to work for the Bitcoin Foundation and for a smart wallet company called Coinbase. And so, but he was early in crypto. He's done quite well. And his age group, like young 30-year-old people, because of the global conflicts between China, US, the importance of critical minerals, owning your own mines, having your own metals, we're seeing this increasing population of young investors that are coming into the market looking for exposure in mining stocks, which if you went back 5 years ago, those same investors were like, no, we don't like mining. I believe in saving the environment. And there's a big fundamental shift. And so I see a continued increase in liquidity coming into mining stock from young investors, which is great for the cycle. And that's kind of, really where we want to be.
Thank you. That's a very interesting and confirmatory comment. So we're going to wrap it up. Happy Hanukkah, Merry Christmas, Happy New Year. And if anybody needs anybody's contact information, just reach out to me and I can help you all. And thank you all and happy holidays.
Happy
Thanks,
holidays.
Tyson. Happy
Good.
holidays.
Thank you.
Thanks, everybody.
Bye.